All right, guys, let's continue with the carrying value here. We've already done the opening. I did show you that we need additions at cost. That's why X was hiding there. We still have question mark of the disposal at carrying value. We have current year depreciation. We also have the balance at the end of the year, which is 1,232,850. I'm going to go back to the equipment slide where the equipment was sold slide just for us to calculate the carrying value of that equipment when it was sold, and probably asking yourself, when was it sold? Why are we saying that actually it wasn't even sold, it was disposed of? They got rid of it. Basically, we didn't get anything. There's no cash inflow from that equipment. Basically, it was no longer generating economic benefits for us, so we got rid of it. Okay. I'm gonna go to that slide, which is the previous slide. There it is. Okay, guys, please note, whenever you're dealing with a disposal, make sure you draw the number line for you to be able to see when was the beginning of the financial year, when was the end of the financial year, and when was the asset sold. Okay, you realize that the beginning of the financial year will be the 1st of August, the end of the financial year will be the 31st of July 2016, but we sold equipment on the 31st of March, which is how many months into the financial year? It is 8 months into the financial year. Basically, guys, the carrying value that we're given up there of 87,500, that is the carrying value at the beginning of the year. We need the carrying value on the 31st of March 2016, not the beginning of the year, not the 1st of March 2015. So we still need to depreciate this equipment for 8 months in the current financial year. And you were told that we simply use the diminishing balance method to depreciate this equipment, meaning that we need to first find the carrying value of the equipment at the beginning of the financial year. Carrying value at the beginning of the financial year, which is the 1st of August 2015, will be 92,500. Okay. Now, for us to calculate depreciation, guys, current year depreciation, we're going to take that 92,500 multiplied by 15%, multiplied by 8 over 12. We will get depreciation on equipment, just this equipment. It will be 9,250. It is only the depreciation of the equipment sold, guys. Okay. Remember, there's depreciation of all the equipment, of which it has already been calculated for you. You don't need to calculate that anymore. Okay. The reason why I need the depreciation of the equipment sold is because I simply need carrying value of this equipment on the 31st of March 2016. Guys, remember, carrying value, for you to calculate carrying value, you simply take the cost price minus accumulated depreciation of that equipment at that specific point. Accumulated depreciation is the sum of the depreciation. Accumulated depreciation at the beginning of the year was 87,500. There's no ways that accumulated depreciation on the 31st of March 2016 will still be 87,500, because we have depreciated this equipment for 8 months. So it'll be 87,500 plus this 9,250, and hence we simply had accumulated depreciation of 87,500 plus 9,250, and that will give you 96,750. So 180,000 is the cost price minus accumulated depreciation, as at the 31st of March 2016 will be 96,750. 180 minus 96,750 will give us the carrying value of this equipment that we have sold, which is 83,250. All right, this is the carrying value of the equipment sold on the 31st of March 2016. But in this case, guys, we are simply looking for the cost price of equipment. All right, I'm gonna go back to the slide, guys. Showed you. Now I'm going to put in the things that we didn't have. For instance, we didn't have disposal at carrying value. Now we have it, which is 83,250. I'm putting it in brackets because the disposals means that it decreases the carrying value at the beginning of the year because we got rid of that asset. But in this case, guys, because everything is at carrying value, everything, even the disposal will be at carrying value. Okay. So basically, guys, our depreciation will also reduce the carrying value at the beginning of the year. But you realize that our carrying value at the end of the year didn't decrease, it actually went up. The fact that our carrying value went up, guys, it simply means that we bought another equipment. How do we calculate that? Which is the X that I showed you earlier. You will simply take the balance at the end of the year plus everything that you subtracted, plus your depreciation, which is 164,400, plus 83,250 minus 950, it'll give you x. X is 530,500, and that will be your additions at cost. I hope you guys got that. Please go through this slide, write the notes down, replay it. Actually, for this one, guys, I want you to replay it at least 3 times. Okay.